Most people overpay their taxes. Not by a few dollars but by thousands every single year. And it's not because they're doing anything wrong, it's because no one told them this. There's a tax strategy that's completely legal, 100% IRS approved, and almost no one uses it. Why? Because it's not advertised. You won't find it on TurboTax. And your average accountant, they probably won't even mention it. But wealthy individuals, savvy business owners, and quietly successful side hustlers, they're using this one move to save more money than most people earn. And today you're going to learn how to do the same. Before we get into it, tap that like button if you've ever felt like the tax system is rigged. Drop it in the comments if you're ready to flip the rules. And don't forget to subscribe, because we break down the secrets the top 1% never post about. Now, let's get into this hidden strategy. What is this tax strategy? It's called the accountable plan. And if you've never heard of it, that's exactly the point. The IRS allows it. It's built directly into the tax code. And yet 90% of small business owners, freelancers, creators, the problem most people don't see. Imagine this. You're running a small business. Maybe you're a freelancer, online seller, consultant, or creator. You have expenses: home office, internet, phone, gas, gear. But when you pay those costs out of your own pocket, you're losing money, and you're likely not deducting it properly. Now here's the twist. If you're the owner of an LLC or S-Corp, you can reimburse yourself for those expenses in a special way, tax-free, using an accountable plan. It's like paying yourself back from your business without paying taxes on that money. Here's how the wealthy use it. Let's say you use 25% of your home for work. You're already paying rent or a mortgage. With an accountable plan, your business can reimburse you for the portion of rent, utilities, internet, and more as a business expense. The business deducts it. You receive the money personally. No tax is owed. This isn't a loophole, it's a legit tax tool, but only when done correctly. Wealthy people use this for home office space, business use of personal vehicles, business meals paid from personal cards, depreciation of equipment used for work. It's a way of legally shifting personal expenses into reimbursed business expenses without triggering income tax. Why almost no one uses it? Because if you don't know tax law, or if you're using basic software and not a strategy-focused tax advisor, you'll never hear about it. Even worse, if you file everything under a personal name with no entity, this opportunity disappears. That's why the first step is to set up an LLC or S-Corp. Not for vanity, but to play the real money game. If your brain's starting to buzz, comment "Tax Smart" below if you're ready to stop overpaying, because this is just the beginning. How to use an accountable plan, step by step. 1. Form a legal entity. You need an LLC or S-Corp. This strategy works best if you've elected S-Corp tax treatment. 2. Write an internal policy. It sounds complicated, but it's not. You need a short, simple document explaining that your business will reimburse employees, that's you, for business-related expenses. You can find free templates online or get one drafted for under $100. 3. Track eligible expenses paid personally. This includes percentage of rent or mortgage for your home office, utilities, internet, phone bill, mileage or vehicle costs, office supplies or software you pay for personally. 4. Submit a reimbursement form to your business. Yes, it's just a form. You're both the employee and the employer. You approve your own reimbursement. Then, your business cuts you a check. It's fully deductible to the business, but doesn't count as taxable income to you. That's the power. Real-world example. Let's say you pay $2,000 per month in rent. You use 25% of your apartment for business. That's $500 per month. Your business can reimburse you. That's $6,000 per year, tax-free. Normally, if you took $6,000 from your business, you'd owe self-employment tax, income tax, state tax. You'd be left with maybe $3,500. But through an accountable plan, you keep the full amount. No tax. All legal. Now add an internet, and you could be looking at $10,000 to $15,000 a year in tax-free reimbursements. Final thoughts. This isn't about evading taxes, it's about understanding the rules. Because wealthy people don't pay less tax by luck. They pay less because they learn the system. And then build around it if you've been trying to get ahead but feel like taxes are dragging you down. This strategy can shift the game in your favor. You don't need to cheat, you don't need to hide money, you just need to use what already exists. If this opened your eyes, smash that like button. Comment, "No more tax traps," below if you're done leaving money on the table. And don't forget to subscribe, because next week we're covering the top 5 hidden write-offs the IRS actually loves, and no one talks about them. Thanks for watching. Stay legal, stay wealthy.